introductions. First and foremost, unfortunately, my video camera has this issue where it flickers on and off. So it might be a little bit distracting, but I'm not the center of attention. I think the panelists are the ones who you should be paying attention. I'm just the one asking the questions, right? So I do apologize. So that being said, what I like to do is kind of just start off with really quick introductions. And rather than me convey the introductions, I'd like to have each one of our esteemed panelists give a quick introduction. Please don't make it more than a minute on yourself. And I'll start off with, so as Kenny mentioned, my name is Christian. I'm a managing partner of a venture capital fund here in Singapore and New York called Big Idea Ventures. What we do is we are investing in alternative protein sector, which is comprised of plant-based foods as well as cell-based foods. We are proud to be invested with esteemed LPs, investors such as Temasek, Tyson Food, Bueller, and many other conglomerates across the world. And as I mentioned before, I know it is a little bit distracting. My camera, of course, Murphy's Law is flickering on and off. So that being said, I'd love to pass it to, on a quick introduction to one of our panelists, Dr. Sandy. Could you give us an introduction yourself, please, and your company?
Sure, thanks, Christian. Hi, I'm Sandhya Sriram, the CEO and co-founder of Shiok Meats. I'm a stem cell scientist by education and background, but moved into business and entrepreneurship a couple of years ago. I'm a serial entrepreneur. This is my third startup, actually. And what we do at Shiok Meats is that we produce seafood and meats using stem cells instead of the whole animal. So we're looking towards a more sustainable, ethical, healthy, and clean source of protein for the entire world. Thanks.
Thank you, Dr. Sandy, for the introduction. Moving on, Mineto, can you kind of give an introduction yourself at Kickstart Ventures, please?
So hi, folks. My name is Minette Navarrete, venture capitalist. I represent Kickstart Ventures. We invest in early growth stage startups, so kind of series A to C. We make global investments out of 3 funds, and the one I guess we would speak about more and is relevant to this particular conference is our 3rd fund, the Active Fund, which is the one that is most infused with issues around sustainability and solving issues of abundance.
Thank you, Minette, for the kind introductions. And last but definitely not least, Oscar, quick introduction, please.
Thank you, Christian. So I represent the traditional industries by comparison. I'm surrounded by very enthusiastic startup companies, which I find very exciting. So I've been working for a company, AkzoNobel, already a couple of 100 years we exist. We're into paints and coatings. So for many of you, you know us maybe from the brand Dulux when you paint your house. And after this call, for sure, that's the only brand you can use, because that's the sustainable brand that we work for opportunities to make, indeed, also in a very traditional industry like paint and coatings, more sustainable, eco-friendly paints as well. So that is from my side.
Thank you, Oscar, for that. So why don't we, so basically just housekeeping, we're going to have a pretty insightful conversation with all the panelists. And then I think, Kenny, you're going to basically interrupt me and bring up, I'm sure the audience will have some Q&A, which we'll do a little bit later on, right, in about 15, 20 minutes, right? So that being said, what I'd love to ask the panelists is like, look, we are in the midst of a pandemic, right? And with us being in the midst of a pandemic, each one of you, I'd love to understand how has COVID really changed how you organize your business as a potential sustainable business practice? Dr. Sandy, if I can start with you, please.
Sure. I think a couple of things here. We are still an R&D company. We don't have our product in the market yet. We're only about 2.5 years old. So looking forward to launching the product in the next 2 to 3 years. But the COVID pandemic did affect us a lot in terms of us not being able to 100% be in the lab and the R&D space that we are at. We honestly, as an 80% research and engineering company, we can't work from home. The business and the admin side can, but the rest of our scientists cannot. We need access to specific equipment, access to a lab, and so on. Thankfully, the Singapore government was understanding of that, and they exempted us from being shut down per se during the actual circuit breaker period or the lockdown period. So we were allowed to go in to do minimal work. So about 30 to 35% of our staff could go in every day and do some of the basic work that was required. So I would say to an extent, it did slow down our progress, or, to an extent, definitely put us 6 months behind our milestones and KPIs. But I think the whole world has, shut down due to COVID. So I think 6 months, a delay or a slight delay of 6 months doesn't affect too much per se, thinking of all that's happening around the world. I honestly have no complaints. But one thing that has happened, which is a big advantage for us due to COVID, is that the whole food supply chain has got disrupted. Every country was finding it hard to get the products that they were importing or exporting. Access to some of the brands, the foods that we were so used to eating, even in developed countries like Singapore, was hard to find. So I think then the whole question of whether COVID started from a from a seafood or a wild animal, or meat, the meat market was a big question mark again. And I guess it was proved that yes, it was from there. I think all of these put together put questions in consumers' minds as to where our food comes from, how it's made, what it contains. And this made everybody think and read. And we were all on social media, on the internet throughout the last part of the year, most of the year. And that made us, look into alternative sources of food. And that kind of brought this home boom into alternative proteins and sustainable food. So I think now consumers are a bit more aware. And when we speak to them about cell-based meats, which was not the case 1 or 2 years back, they used to be like, cell meats, lab grown, like why? But now they are aware of this term. At least they know what it is. And then they come back and ask us questions, and then we're able to educate them further.
Thank you, Dr. Sani. And Oscar, I'd love, from kind of a traditional company, how has COVID impacted, if at all?
No, that's a very good point. So our focus was very much around protection around first of all, the employees themselves. So we had a big program about helping people to deal on a personal and a family level with all the anxieties. So as you manage a multinational company, that's something very, very important that you have to do on a very short focus. People are afraid of losing their jobs, their livelihoods, apart from, of course, the concerns they have of contracting the virus. So we had a whole program around that group of stakeholders. A second, what we called ring of protection, was around the facilities. So like Dr. Sanji also called out, how do you take care of your labs, your facilities, your warehouses, your factories, to make sure that they are safe places to operate. Whole programs around that, about sanitization, providing PPE equipment and the like. So huge efforts there being done by the teams. And thirdly, of course, the communities and the company itself. So a lot of work has been done to use our facilities to provide even food to the community at large, where we have factories. In India, we're now providing medical services to 80,000 of the painters that work with our products in the market. So a lot of programs there to help the communities in which we operate. In terms of sustainability, yes, I think we are a bit of at a crossroad. So there are clearly different segments in the market by country where you have to distinguish. On the one hand, indeed, I fully agree, there is a group of consumers that, and we fully embrace that and support that, that are becoming more sustainable conscious. So for example, this month we launch in Vietnam, actually our first Living Better Deluxe brand, which is based on bio-based materials with carbons that also will purify the air. We also are launching similar type of products in other countries in the market. On the other hand, we also have to recognize that if you look at the market at large, there's also huge groups of people that are losing their livelihood or really have to tighten their belts. So at the same time, if I look across the whole portfolio of products that we sell, we also see that the more mass market or economic ranges are growing somewhat faster than the premium ranges, where the sustainability message is indeed taking more hold. So we are a bit of a crossroads. And yeah, as a big multinational company, we have to be mindful how we balance that portfolio and how we continue to indeed help to educate the market that there are better solutions out there.
Thank you for that. And I mean, in terms of for Kickstart, I mean, how do you play in that whole dynamic, especially when it pertains towards investing?
So I think from an investment standpoint, the answer to the question, have we been affected by the pandemic, is yes and no. On the yes side, we've been a global investor since 2015. And so we are quite used to, when the lockdowns were called, it was not a difficult thing for everyone to say, everyone work from home, set yourselves up, and we'll get work done from there. We didn't need labs, we didn't need factories. So on that side, it was quite easy. I think the challenge for us is that as investors, we believe in the importance of the people that we invest in and the founders we invest in. And so it's a challenge for us to get to know people, particularly to get to know new people, to build new connections. There is something wonderful about being in the same room, kind of breathing the same air, is the way one of my bosses had said, although obviously for this current pandemic, that's a bit of a risk. On the other hand, I think it has, similar to the two other panelists, it's brought to the fore certain issues that maybe have been things we've been thinking about. So we're a corporate venture capital firm. Our principals, Globe Telecom and Ayala Corporation, have had sustainability in the kind of infusing it into our work plans since 2015. The group is the first company to put out a sustainability report integrated with our annual financial statements. So our annual audits are not just financial audits, we also run sustainability audits. And I think that's an important thing going forward. As an investor, as a business, it's important for us to keep thinking about how we make and support businesses that make for better business. And better business does include more ethical, more sustainable businesses.
Thank you, Minette, for that answer. Another question for the panelists is, at the end of the day, we all have different stakeholders, including shareholders, whether you're a private company or you're the largest multinationals in the Philippines, Singapore, wherever it is, right? How do you balance the economic interests of your shareholders who are looking for a financial return, but also looking at from a society good? And Minette, I'll leave with you from a CVC, and then we'll go to the rest of the panelists to answer that.
Maybe I'll start with the shortest answer. These are not diametrically opposed. I think in the old days, you sort of thought that you had to make a choice between commercial interests and which were largely economic, and sustainability. I think what we all are learning, especially with the current condition, is that you have to take care of both. As a very old business house, so Kickstart belongs to the Ayala Corporation Group. It's the first business house in the Philippines. It's over 186 years old. We understand that these investments in the businesses will create a lot of value, but it does not work if the value you create leads to greater inequality, which is something that we see everywhere in both developed world and emerging markets. And so our perspective is that it is important to weave both together. And if we have good stakeholder management, and every company needs that, whether you're a startup, a traditional business, or an investor, then I think we must be able to articulate how deeply integrated sustainability is in our character. So it isn't a small department, it isn't a marketing line, it is actually the way we do things.
Thank you for that. And Oscar, I'd love your perspective, please.
Now, I'm so happy with the reply that Minette gave, because indeed the question implies there is a contradiction, and we don't believe in that at all. We strongly believe that good business requires sustainability, and sustainability requires good business. They're really much hand in hand. And what I've seen made the biggest impact already quite a couple of CEOs ago in our company is that it starts with the tone at the top in our case. really saying, well, we're going to embrace this. Our vision is, in our case, people, planet, paint, if you like. And we really see a lot of opportunities across the value chain, how you can develop the sustainability agenda. And I remember my first meeting with also our suppliers, when we started to map out the carbon footprint in the paint and coatings industry. Half of the carbon footprint actually is generated by suppliers because we buy in resins, dissolvents, titanium dioxide, and it is quite labor and energy intensive to prepare those raw materials. The other half actually of the carbon footprints takes place in the application of the paint, either by painters, by households, etc. So what we actually, let's say, cause in terms of carbon footprint within the manufacturing processes in our factories is actually relatively limited. So you have to come up with a very comprehensive approach where you indeed interact with all your stakeholders. And I remember my first meeting with suppliers, and we talked about, hey, you have to be more sustainable. They looked at me like I was really crazy, you know? Like, are you prepared to pay 10% more if we come up with a green raw material? Probably not, because we just talked with your procurement manager, and procurement managers are squeezing me out for the lowest possible cost. So how do you deal with that? So when we started to articulate our vision of people, planet, paint, started to engage with our stakeholders, indeed, like Minette said, we started to help them. We started to audit their operations. We started to show them best practices. And we also pointed out how much waste in every stage of the value chain, including in our own factories, is taking place, that we can still reduce and work together, that sustainability and let's say the economics, the price per liter or per kilo, that doesn't have to be, let's say, a contradiction at all. There's a lot of opportunities to improve. And when we look at the customer side, of course, also there you engage with your stakeholders. There's a lot of opportunities where more sustainable products actually can help drive down the cost. We have released paint that reflects heat, and therefore you can reduce the air conditioning in your house because we have, let's say, heat reflective paint on the outside of a building. So coming up with more solutions across the value chain, there's a huge process of education, awareness, proposing KPIs, measuring it, auditing, rewarding also suppliers that do participate in this whole journey by providing them more business. But that can be there, very much a win-win situation. But it's indeed quite a comprehensive effort that you need to do so.
And Dr. Sandy, I think your business inherently is focused on the environment and in terms of sustainability. How do you convince large investors that there is a financial, and this is not a binary decision by investing in the company or working with Shockme?
I think currently we don't have to convince investors. Rather, it's come to a point where, like Minette said, it's become a major part of most investors' mandate to support companies that have a sustainability aspect to it. And especially our company, like you mentioned, is 100% built on sustainability, environment-friendly, animal-friendly, health-friendly kind of concept. So we haven't had to convince customers. It's more, investors. It's more convincing on the technology and the ability of the team to get the product to market and so on. I don't think they have any doubts in, whether this industry is really required, whether cell-based meats is a need versus a nice thing to have. It is a need of the hour. I think most investors have understood that. And of course, but that doesn't mean we don't talk about it. We stress a lot on sustainability. We look at sustainability from even the R&D level, because we have had questions being asked, oh, how much plastic do you generate? Because we end up using disposable equipment and consumables at the R&D level. And, we have been asked a question like, you're a sustainable company, why do you use plastics? Unfortunately, there is no other option at this point. I wish there was glass. I wish we could go back 50 years and start using glass ware. We try to use 70% glassware in our R&D, and 20 to 25% is still about plastic. But even then, we try to see if we can even reuse plastic to an extent. So we are so bothered about sustainability, even at the R&D level, that it extrapolates when we go into manufacturing for sure.
Got it. Thank you for that. So when we're, this is about CXO Summit, right? So if for an organization that may have not implemented any sustainability practice, let's get to kind of the brass tacks. Like, talking Oscar for your company, what are some easy initiatives at either the operating level or the business unit level that organizations can undertake to start incorporating sustainable business practices? What do you recommend? Your advice, please.
Well, unfortunately, the biggest advice I have is it does start with a tone at the top. Otherwise, also for middle management who have very good ideas, for example, installing solar panels. Many of our factories now, we installed solar panels to many companies, and many of our units are reducing waste. We reduce 40% of waste. But indeed, if it's not supported by the top, it's very hard to leverage those initiatives. But nevertheless, those initiatives really take hold. And then really to bring that change about in a company like ours, a multinational company, you also have to think about incentivizing making the right choices for your team. So for example, in our product development process, when we are reviewing all the initiatives, sustainability is now a key element in our decision-making process, whether or not we push ahead with the product development or not. And again, that is not possible if you don't have the tone at the top, like this is the type of company we want to be. And the messaging that we send out into the market, and it has to be more than just messaging. You have to back it up with real proof points. We see that reflected also in all the audits and the EcoVadis scores that we received, that we're now a platinum EcoVadis sustainability partner from them. That also then builds a lot of, let's say, pride in the company, and also it allows us, when we start to attract new colleagues that want to join AkzoNobel, they go to websites, they see what we stand for, they see what we do. You start to attract also talent that wants to be part of that journey. So it really becomes a self-propelling mechanism. So that for me is really like, if you really are honest about this, if you really are committed to sustainability, yes, there are some, let's say, initiatives that you can do locally, but it needs a more comprehensive effort.
Now, before I move to the other panelists, I'd love to get their opinion. Just kind of diving into that question is, what if you don't get buy-off at the CXO level? Even though we are in the CXO conference, but if you don't get it, you're the head of a big business unit or whatever. How do you convince the CXO to implement this? Like, do you have any tips or recommendations on that?
Well, what we done, because of course you had departments that already were starting in that journey, is that they have to present usually to management that if you do a bit of slicing and dicing of your business results, invariably you see that your sustainable products and processes are more profitable. And that starts already with very simple logics. If you have products that don't have the same level of waste, in order to produce them, the cost price will be lower. If you have premium solutions that really solve problems of customers, I talked about the heat reflection paint that really allows you to dial back your air conditioning for consumers, you will probably invariably find out that those are products that have a higher margin. Presenting to top management those kind of statistics that sustainability is good business, and it is, usually helps to start opening their eyes as well.
Thank you. And that the two-part question again is really from, number one is, as I just kind of repeat the question is effectively, how do you start incorporating sustainable business practice from an operational perspective? Yeah, I know you're part of the CBC, but if what you've seen from the parent would be ideal. And number two, second question is, okay, if you don't get buy-off from the top, how do you convince the top to actually implement this?
I think you're on mute, Minette.
Yeah. So I think maybe when I think about an overarching response to the question, I think you don't become a sustainable company because your business practices are sustainable. I think your business practices become sustainable because you first of all decide that this is the kind of company you want to become. I love how Oscar talks about the tone at the top. That is absolutely necessary. But I think it also means you have to get buy-in across your stakeholders, both inside the company and outside. In our case, the way we have done this, both as an investment firm and as part of a conglomerate, is that we had a good look at the SDGs. We chose which goal was the one that made the most resonance with investing. And for ourselves, it was the 9th SDG about industry, innovation, and infrastructure. We articulated what that meant for us in terms of how we decide what do we say yes to and what do we say no to. And that's an equally hard thing when you're making investments. I think the other thing that maybe made it easier was in addition to the SDGs, we also in Globe talk about the 10 United Nations Global Compact principles, which are around human rights and labor and environment and anti-corruption. And maybe Christian that one because these are not controversial. These are things that you want to do, whether you're at the leadership level or you are at the operating working level. So we spell for ourselves how these global compact principles impact on the way we do things. And I think that has helped us. We don't have an answer for every single thing. As Sandy talks about, you sometimes you make certain choices which mean that you can't optimize on other aspects. But you make choices and you get there over time.
Thank you for that. And Dr. Sandy, you as being the CEO of your company, how did you implement it beyond the fact that, yes, I understand your business effectively is a sustainable business, but from an operational level in your respective team, like what are some of the stuff that you've done?
Yeah, at this point, I think we're a team of just 20 people. So it's been, I would say, easier to implement certain things. And it's more of everybody coming up with ideas together to implement certain sustainable options. It's been interesting for us. My co-founder and I are very thoughtful of what we purchase for the office or the lab space or whatever it is. But interestingly, our staff are even more concerned than us. So they come back and say, why do we have disposable cutlery here? It was probably coming with some order that we did on like a delivery platform, and it came along with it. So we had kept it there, and they're like, why is it there? We should be using wooden or steel utensils. It's all small things, but I think when it all adds up to, it becomes a huge problem, right? So it's been interesting where each team member comes back and says, can we not keep the aircon at 17 and 18? Can we put it up a little bit and reduce the fan? It helps. I mean, it's not just saving cost in terms of electricity, but the whole carbon footprint of your business. Let it be a 500 square feet office or 1,000 square feet office. 100,000 500 square feet offices make a lot of difference. So I think everything that we do, everything from switching on the light to switching it off, I think my team is so aware of it. We never had to implement it in written saying that, oh, you have to switch off your lights when you leave or anything like that. It's just inherent. I think we have been blessed to find the best team, but we do understand that as we grow as a team, it might be harder. So we are trying to put things on paper slowly and, giving friendly reminders to people that, think of everything that you do in a sustainable sense rather than just the bigger picture.
Thank you for that. And before we go into, we got a queue of really fantastic questions. So I do have one more question for the panel, and I'll jump over to the Q&A in a little bit. But, when we're talking about sustainable investing and principles, like, what have you seen the impact, if any? Hopefully there's an impact, and I'm assuming there is, but what are the impact you've seen in your organization, whether it's through the financial aspect, from the operation, for the people, whatever it is? I'd love to get some insights from the panel. And I'll start with Minette, with yourself, either from the CVC perspective or from your parent conglomerate.
I think for ourselves, the most visible impact is engagement metrics. So as an investor, we make a habit of measuring everything. And the way that our company team members, whether it's at the conglomerate level or at, my tiny team is like 12 people in a VC firm. One of the values that we talk about frequently is caring like an owner. And I love the examples that Sandy makes about, you don't need to remind people to turn off lights, to do this, do that. And so we talk about caring like an owner in the sense of also caring like you're an owner of the company, but also caring like you're an owner or a member of the community, of the ecosystem of the planet. And that means that we absorb these practices. And when you take measurements around occupational engagement, team engagement, productivity, you can see that the measures that we put in place do make a difference. Happiness is an equally important aspect, especially in fraught times like this.
Oscar, your thoughts, please.
Yeah, so it's in terms of investors. Well, as a multinational company, we are listed at the Amsterdam Stock Exchange, and many of the investors in our multinational company are Anglo-Saxon based, so either based out of London or in the United States. And I would say the majority of them don't yet drive their financial decisions primarily on sustainability topics. About 10% of the investors in AkzoNobel are more ESG focused. A couple of them jump to mind. And actually we like them a lot because also they tend to be investors that take a more longer term view on the, let's say, the health and the trajectory of the company, and not so much of a shorter term view. So we definitely, well, we engage with all our investors, obviously, but that's a bit the reality we have to balance there. The stakeholders that you have to manage there, it's very important also that you think about your board of directors. So you, on the one hand, you have the executive committee that sets the tone, drives it. I fully appreciate and agree with Minette that you indeed work with all your stakeholders, customers, suppliers, etc. Along the board, also we went through the process of picking our SDGs, in our case number 11 and 12, as a good way to get started, and you spread that message. But you have to balance, on the one hand, the short-term profitability of the company and the longer-term view, how you truly can make an impact in the industry. And there you have to engage with all your investors. But you have to also there, you have to, the reality is that you have different type of investors with different type of priorities. And the questions that we often ask also the analysts, they are like, every meeting that we have the analysts, we talk to them, so how important is sustainability becoming? We do see that COVID in that respect accelerates the recognition for sustainability. But like in our case, if the majority of your investors are relatively more Anglo-Saxon based, the financial still tend to be at this point of time mainly financially driven. Sustainability is nice. And a minority, but hopefully it's growing, will see it as really a driver. Give you an example there, Christian, also that also governments have a role to play. A good example was that during COVID, the Dutch government, I'm Dutch, decided to help the local airline company KLM through the financial crisis, and they gave them 4 billion euros to help survive the pandemic. But also they said, well, we're going to put some sustainability targets related to this. Otherwise, we don't bail you out during this pandemic period. So just to make the point that also governments can play a very active role of either raising the bar or putting or linking conditions for financial support to sustainability objectives.
Dr. Sandy, do you have a perspective on this?
Yeah, I think for us, every key stakeholder that we try to work with or we are working with comes with the concept of sustainability and impact from it. So all our investors believe in sustainability, and most of our investors are impact investors, sorry. So that's on the investor side. Then our team again has joined us because they do believe in the vision of, you know, having an alternative source of food and it being a sustainable, cleaner, healthier source and better for the environment. I think one thing that we have had to do a lot is to educate the rest of the industry. So everybody from the suppliers, like, you know, Oscar was mentioning, you may be an extremely sustainable company, but you're not producing everything that you're using. So you have to, you know, look out to suppliers, and you want to make sure that that supplier understands sustainability and has some sort of ESG goals there so that they're able to come in line with us. So it's been a lot of, I would say, industry education and consumer education, of course. But consumer education, interestingly, has been more on the technology and the product rather than how this product is sustainable. You know, so it's been that way. And I think everything is slowly coming together, which is good. The traditional seafood industry is looking to understand what we're trying to do and how they can work with us. The traditional food supply industry, from where we buy our ingredients and raw materials, is slowly trying to understand why we're buying it from them and for what we're using it for, and why each ingredient that we buy needs to be a sustainable source as well, eventually. So it's been a lot of education on both sides, give and take at this point. But I think it's all slowly, I would say actually rapidly coming together, which we are pretty happy about. And we see the effect in place already with the whole boom of plant-based meat, and everybody's talking about these brands that are doing alternative proteins, and people, and whoever, I mean, at least when I meet, I would say that 70% of people have tried plant-based meat at least once. That shows that there is some excitement that's coming forward, and the next 10 years is going to be very, very interesting and exciting for all of us.
Well, thank you for the panelists for answering some of the questions that I have. I think now it's only fair to kind of switch over to our audience, as there's a bunch of great questions there before we end in about 8 minutes. So one of the questions which, Minette, you've already answered, so I'll let the other panelists kind of tackle this before you can come back, is, would sustainable investing lead to lower returns for corporates? Oscar, what do you think?
No. Again, that comes back to the fundamental premise that sustainability and economic benefits are not at odds with each other. So starting with reduction of waste but also having premium solutions like what Dr. Sanjaya is working on. No, there's not a contradiction there.
Dr. Sandy?
I'm just going to say no way. That's it. Pretty much say no way. And, in fact, we are seeing higher returns for when you invest in sustainable options. We have seen that with Beyond Meat, just as one example, to see that they raised an amazing IPO. And that's a super great return for all investors that invested in Beyond Meat. Yeah.
Well, Dr. Sandy is too modest to say it, but we as a VC fund have invested in Shock Meat as an early investor, and it's turned out to be one of the most valuable cell-based companies in Asia. So I would say the same place. Minette, you have a fantastic answer then. Some people might not have read it, so it would be great if you can just tell us what you said. You're on mute again, unfortunately.
As an investor, our view is it does not. Investing for the long haul means that you take returns over time, and not this year, not 2 years. We are looking at building companies that last and that deliver returns over time. I think the other thing people need to think about is that when you have a regular kind of company, sometimes it looks like they deliver, a non-sustainable company or non-sustainable practices. It looks like they deliver better returns. But that's because there are certain costs that are not being measured. And they can be costs to society, they can be costs to the planet. And these things are not measured. But when you measure the full impact, and you take a look at whether the company covers it, or the community covers it, or the government covers it, the returns are not going to be worse for a company that practices sustainability.
So, we've been all kind of cheery-eyed and glass-tinted eyes and so forth. I love this other question is, let's look at the other side, which is in verbatim. The question is, was there ever a situation where your decision to invest with ESG principles led to a loss-making outcome or the returns were not as lucrative? How did you approach it and manage that? Oscar?
Not that many, actually. If anything, the risk I've seen is that we sometimes believed so strongly in a sustainable solution that we were too ambitious in how we positioned it in the market. And that put it a bit out of reach of too many customers. So we're now about to launch, for example, a paint which is antiviral and antibacterial, and we made a absolutely decision on purpose not to position it from a price point which is too high, to make it really accessible to a very broad audience, and not make the mistake saying, well, we start to believe so much in our fantastic sustainable proposition, everybody for sure will want to buy it, let's price it for 45-50% more expensive than a premium product. I think I've seen that in the past as a kind of a hubris, sustainability hubris type of mistake. If anything, I believe more that our purpose as a company should be that we really make sustainable solutions more accessible to a wider audience, and don't push it that you make it too exclusive. That's, if anything, the learning effect that I've seen.
Minette, on your side, on your VC fund?
Maybe let me start by saying venture capital is the highest risk asset class. And therefore, in answer to the question, was there a situation where a decision to invest with ESG principles led to loss-making outcome? The answer is yes. We have made decisions with ESG principles, and we sustained losses, but this has not been any greater a loss than investing in companies that do not have ESG principles. And I think we have passed on companies that looked amazing for commercial reasons, but we thought they were not, from a values perspective or from an ESG perspective, they were not good. And over time, we have seen founders make wrong decisions that have led to business problems because they had not been properly guided. So I would say it's just, yes, there are definitely times where you make a loss, but it's just the same as any other company.
Dr. Sandy, anything else to add to this?
No, I think I just want to I think I'm going to use that line again, Minette, somewhere or the other. But I think what you mentioned was companies that don't have ESG or non-sustainable, principles behind them do have an effect that somebody else pays for it, and they might show a bigger return, but somebody else pays for it. I think I love what you said. I think you put it in a very well-rounded language. So for us, it's about, looking at impact versus cost versus what's the final outcome of it. We are a for-profit company, even though, we're looking at sustainability, environment, all of it. At the end of the day, we're a business. We have to make money. We have to make money so that we can put it back into the business and make better products, and we can reach the mass population. And of course, we have to return whatever investment. And we are not, we are a very capital intensive company. So we do raise larger rounds, and we're going to look at raising multi-million-dollar rounds, hundreds of millions of dollars that goes into this company. So we have to make returns out of it as well. So every decision that we make, yes, we think about it a lot. It's not made very easily. But at the same time, it depends who pays the price of you making the wrong decision or an unsustainable decision per se.
Thank you, Dr. Zain. And with that being said, thank you everyone on the panelists for your fantastic answers in terms of focusing on investing and sustainability. Kenny, I shall pass it over to you. I think we are out of time.